particularly what I want to talk about is um, over the last few days, we have noticed that there are changes in the institutional flows. This is particularly in the largest tech stocks, uh, like the Nvidia, the Apple, Tesla, Microsoft, etc. Now, how can you figure this out? And how can you check whether I'm not just blabbering something around? Now, if you have your broker uh, platform, stockbroker platform, you log into that, you enter the stock symbol, and then when you look at the fundamentals of that particular stock, they also tell you um, what are the holdings. Basically, um, maybe 70% or 80% of that stock is held by institutions. Next to that, there's also a small table where they tell you which institutions hold how much, right? In some broker platforms, you will also get information within that particular institution, which specific fund holds how much, right? One specific fund maybe holds 1% of that stock. Now, what we did was to kind of analyze and understand what was changing. And this is the I can say interesting part here. Among the Mag 7 stocks, the Nvidia, Microsoft, Google, Apple, Amazon, Meta, um, who else is there? Not too sure. Basically, the Mag 7. Um, and a few other large tech companies. Uh, there aren't that many, I can say, secondary market trades that are taking place, but the funds are basically making block trades among themselves. In some cases, it is moving within that particular firm itself from one fund to the other, or it is moving basically from one firm to the other. Uh, Now, why is this important? I think what is important is understanding the characteristic of these funds. So many of the funds basically hold the stock at least for a quarter, and they will do what is called as a quarterly rebalancing. And when that quarterly rebalancing takes place, the the stock holding might change, increase a little bit, decrease a little bit, whatever. But then now what is happening over the last few days and weeks is the character of those funds to whom the fund basically the stock is being passed on, that is changing. Now, instead of so from the fund A, which has a quarterly rebalance, and they will most likely hold the stock for 1 quarter at least, it is moving into more shorter term funds, which will um, instead of rebalance, they rotate the capital, right? So, which means that they will shift very quickly, right? So, when that process takes place, there can be massive price drops. And this is exactly what we want to talk about. So, in order to recap this, number one, go into your broker platform, look at the fundamentals of the stocks that you're trading. Underneath, you will find basically the institutional holding. Or I can say maybe a kind of a table that says maybe 76% of the stock is held by financial institutions. And promoters hold maybe 3%, 2%, whatever. And then there's basically there's a retail pool which holds 6%. Whatever. That sort of a table will be there. In some of those brokerages, you will also see a breakdown of which institutions are holding that particular stock and how much they are holding. And you might also be able to double click on that and say within that particular institution, is there a specific fund that holds this particular stock? Um, and if it is held by multiple funds within that particular institution itself, it will give you a breakdown saying these are the funds. Now, what are we seeing and why is this important? Now, let's start off by talking about the character of the S&P 500 itself. The S&P 500 is a market cap weighted index. So what this means is the higher the market cap, the higher the weightage that that particular stock has on the S&P 500. Now, the Mag 7, basically the largest technology firms like Tesla, like Nvidia, Apple, Microsoft, etc., are 35% of the S&P 500. Now, S&P 500 is 503 stocks, 500, but actually 503 stocks. Now, these seven stocks are 35% versus the remaining 496 stocks are 65%. Now, that's the nature of that index, right? I'm not saying that is wrong. That's the nature of the index. But what this means is that it's no longer a true barometer of the economy. It's a barometer for the tech sector because that's where the weight is. So uh, basically, the remaining 496 stocks are most of them are fairly valued. If you go pick and choose, basically within the S&P 500, I'm sure you will find maybe 25, 30, maybe even 100 stocks that are fairly valued. Right? Take a reasonable price earnings ratio. You will be able to find 25, 30 stocks which are fairly valued, uh, worth investing, etc. But then just looking at what is happening over the last few days, last few weeks, etc., and how this is basically progressing, is the shares of these largest tech companies are moving between funds in block trades, and those block trades are going from funds that would hold the stock for a long time, like mutual funds that will hold the stock for at least a quarter or maybe continuously for a year, whatever. It is going into other funds that are likely to rotate the capital, which means that it's likely to have short-term kind of a strategy. So they might just dump this stock very quickly. Why do we need to know this? We need to know this because if we are investing in an index, uh, we need to know the character of that index. And on top of it, when the S&P 500 moves, it sets pretty much like a ripple effect onto other indices, not only in the US, but around the world, right? So whenever there is any changes in the S&P, you will see the FTSE also kind of mirroring that. You will see the DAX going pretty much in tandem. It might not mirror exactly, but you'll see the shift. Uh, Now, when I talk about this particular aspect, I've always said, your tech stocks are overvalued, not the entire US economy itself. I'm not writing off the US economy as a whole. I'm basically worried only about the fact that because it is overweight and because of the fact that it is likely to undergo some short-term changes, and when that change in the S&P takes place, yes, it does give you an opportunity to buy some of the fundamentally sound stocks at a discount. Obviously, a fund like us will definitely use something like that. But what it also does is it creates that ripple effect. So if you're holding on to maybe an index fund in any other geography, you're likely to see that effect as well, right? Uh, Basically, that is something that I wanted to, first of all, highlight. Secondly, a big, I can say, um, issue, whatever I want to call right now, is this nonsense around this government shutdown. Because we are right now trading pretty much like blindfolded, right? We don't have the uh, data coming in, except for data that comes in from maybe let's say other universities, from various other companies like MSCI, example of those. That data is available, but that's not a complete picture, right? So that means that traders are in a blindfold right now. When that shutdown kind of relaxes, and when data becomes available, you could see a correction, because traders have been blindfolded for the last few weeks. They're probably going to continue for uh, maybe the rest of the month. Um, so somebody said, based on some sentiments that we were seeing, basically quick sentiment analysis that we do, what we find is that there is a expected drop, because we've been pretty much blindfolded for an extended period of time. So there's likely a drop. This week, you're likely to see some market correction for sure, right? Why do I say that? Monday opening gap was pretty positive, and Monday actually the S&P closed uh, positive, in the sort of positive territory. Uh, Today also the expectations seem to be a positive opening gap. Now, what I told you about the block trades to start off with, that's the point that I want to convey, right? We don't know when those block trades will materialize into a dumping. And when that dumping happens, 35% of the S&P is these seven tech stocks, and that's where the risk is concentrated. So when that changes, then automatically you're going to see maybe a massive fall. So one of our analysts essentially kind of estimates that the value at risk for the S&P this week itself could be minus 9.3%. Um, when we kind of look at it holistically, the S&P has had drawdowns of 14-15% in the past. Liberation Day, 17% drop or whatever, right? So this isn't surprising. But what is surprising is it's not going to be just one single drop, but it's going to be more sustained. Uh, Second factor to also look at is, um, as we all know, um, traders like uh, certainty in the way they operate. And the period